Carvana just announced their earnings, and the stock rose nearly 50%, making the father and son duel a big bag in the process. This is Carvana on the monthly chart, and it's actually the best performing stock since 2013. Stock is up more than 2,000%, and based on the monthly chart, it is going higher. The next major level of interest that I see is going to be this little doji candle here, as it's a drop in price, basic candle, and then drop out. So this would be where I would anticipate sellers coming in the market. This is the monthly sellers level at 160. Now taking it down to the weekly chart, you can see how price has just been in a straight up and down pattern. Had the impulse move higher, pull back, impulse move higher, pull back, impulse move higher, pull back, impulse move. And so with this type of movement to the upside, you had multiple areas to get long. Really kind of going back to the lows. You had a daily bias form. Price didn't get back to that level. However, price did get back on 2 occasions to the monthly bias level at about $7. You had support resistance. Once that broke, price pulled back, gave you an opportunity to get long. You had a daily bias level at $38. Price nearly nipped its toes in the upper portion of the zone before eventually breaking resistance. And this is the move on earnings. Again, nearly up 50%. And this is the level that we saw on the monthly chart. And when I zoom in to the weekly and the daily, trying to see where the real level of interest is. And on the weekly chart, I'm not seeing what I wanted to see, which I saw in the monthly chart. But you do have these rejection wicks. So let's zoom down to the weekly chart. Yeah, too much trading, but as you can see, you had a lot of trading in this 110 to 170 region. So the chart suggests price should at least pause. If we just zoom back out to the weekly chart, one could say you have support, now resistance. So next short-term target should be $130. Now get into some of the news. Again, the stock rose 44% this week. The online used car marketplace reported surprisingly strong earnings for the first quarter of 2024. As you all know, 2022 and 2023 were rough years for the company as customers retreated from pandemic-era online used car shopping, sending unit volumes tanking for multiple quarters. So during the pandemic, they were buying cars as price was of those cars were moving higher. And then after the pandemic, coming out of the pandemic, we had a drop in price due to interest rates. So they're showing a big, huge loss on their books. They bought those cars on debt. So, their debt to equity ratio was looking very ugly. So on top of the volume growth, Carvana posted a surprise profit in Q1 with net income of $48 million. This is compared to a net loss of $288 million in Q1 of last year. This combination of growth and profitability likely had investors in Carvana quite happy. Carvana also has a high short interest, which is also probably the reason why we saw the boost in stock price this week, estimated at 33% of its freely tradable shares. Now again, it has a high debt load of $5.5 billion and historically struggled to generate any sort of positive free cash flow. Even though the company is growing again and showing a slight profit, the stock looks wildly overpriced at a $25 billion market cap plus its $5.5 billion in debt. So, really the story is the shorts are getting pounded, and typically when price moves higher, the shorts have to recover, and the way they cover is they have to buy back the stock that they sold short. So that's only going to put upward pressure on the stock. So again, nice week for the bag holders. Look for your next target at $130. Bigger target comes in at $160. Thanks for watching. Subscribe. Please like the video.